Hello everyone, welcome back. As we have completed our chapter in our last video, chapter number 3, admission of a partner, okay, we are starting with the short and long answer questions. In this video, I'll be discussing all the short answer questions given in the NCERT book. So let's look at it. So the chapter was our admission of partner, short answer questions and solutions. The first question given here is identify, what we have to identify various matters that need adjustment at the time of admission of a new partner. So what all things we need to do when we are admitting a new partner? We all need to first of all adjust the profit sharing ratio. After that, you all remember that when a new partner comes in, how he's taking his share or how the other partners are sacrificing. So we used to calculate sacrificing or gaining ratio in this. Then we used to do the adjustment for goodwill. We used to calculate how much the goodwill is if it is not already given in the question. Then how the sacrificing partners will be credited, how the gaining partners will be debited. Next was revaluation of assets and liabilities, that as the new partner is coming in, the assets should be revalued at the market, asset and liabilities should be revalued and reassessed at the market rates. So we used to prepare a revaluation account. Next was the thing that we used to do with the old reserves, old profits or old losses. What we used to do, it's all old, so we used to give it to the old partners in their old ratio. So accumulated profits, losses, reserves are distributed among the old partners in their old ratio. And the last thing that we have to do is adjustment of capital of the partners. So partners capital we have to adjust. It might be as per the new profit sharing ratio or it might just be the balancing figure. Okay, so these are the things that we all have to do when we are admitting a new partner to the partnership. Okay, let's see the next question. Question number 2. Yes. Why is it necessary to ascertain new profit sharing ratio even for the old partners when a new partner is admitted? So the answer is really simple. So when a new partner or partners are admitted, then the old partners in the partnership firm need to sacrifice their share of profits in favor of the new partners. This we can understand like this, that like we ordered a pizza and suddenly I and my friend ordered a pizza. Okay, there are 8 slices in that, we ordered a large pizza, and suddenly one more friend drops in, ki, hey, hello, we are happy or we are sad? Generally we are sad that now even we have to sacrifice few of the slices. Okay, I'll sacrifice, my other friend will sacrifice in favor of the other. So that new friend who is coming in is the gaining partner. We are the sacrificing partner. So this is it. Then this reduces the share of profit of the old partners. Hence it is necessary to ascertain the new profit sharing ratio even for the old partners in the event of admission of a new partner. Okay. Next question. See, these are short answer type questions. The answers will obviously be short. Okay. In the next topic that we'll be doing, long. They will be long. Be very careful. Okay. So what is the sacrificing ratio? Why is it calculated? So sacrificing ratio refers to the ratio in which old partners of a partnership firm surrender their share. Okay, what they do? They surrender their share. Okay, surrender their share of profit in favor of the new partner or partners. So it is calculated as a difference between old ratio and the new ratio of the old partners. So sacrificing ratio is old ratio minus new ratio. Okay, and what is the opposite of sacrifice? We can just write down one more point here. Yeah, the opposite of sacrificing ratio is the this gaining ratio thing we'll be doing in the coming chapters. So we can just make one more point, that it is the opposite. Okay, let's move on to the next question. Question number, okay, now yeah, We are still at question number 3. Why? Because the second part of the question, why is it calculated? We have still not answered. So, yes, we calculate. It is very important to calculate this ratio as the new partner needs to compensate the old partners for sacrificing their share of profit. The important word being compensation. So, what is this? The goodwill and all, these are the compensation to the old partners because they are sharing, sacrificing their share. The new partner compensates the old partners by making payment to them in the form of goodwill that is transferred among the old partners in their sacrificing ratio. Okay, that we already know. The fourth question here is, on what occasion sacrificing ratio is used? So the following are the situations when the sacrificing ratio will be used. The first situation is when the existing partners of the partnership firm agree to change their share of profit amongst themselves. So no new partner is coming in. See, this was, I guess, the last topic, change of profit sharing ratio amongst the existing partners. So no new one is coming, still someone will gain and someone will lose. Okay, someone will sacrifice. So again, I told you the journal entry will always be gaining partners debit to sacrificing partners. And when a new partner is admitted in the partnership firm and the amount of the goodwill bought him by him or her is transferred among the old partners and sacrificing ratio of the old partners. Question number 5. If some goodwill already exists in the book, okay, book where it will be it will be shown. It will be shown in the asset side of the balance sheet. So if some goodwill is already exists, okay, already exists in the books, and the new partner brings in his share of goodwill in cash, how will you deal with the existing amount of goodwill? So I always told you, whenever you see goodwill in the asset side, okay, existing in the question, write it off. Write it off in the old ratio, okay, give it to the old partners, because this is a form of loss which belongs to the old partners. So if goodwill already appears in the books of old firm before the admission of the partner, then this should be written off amongst the old partners in their old profit sharing ratio. The following journal entry will be passed. See, goodwill is an asset. To write off an asset, we need to credit. Okay, assets have debit balances. To write it off, we need to credit. And who will bear this loss? The partners. So partners, old partners' capital accounts will be debited. So goodwill written off in the old ratio among the old partners. Next thing. Why is there need for revaluation of assets and liabilities on the admission? Why do we do that? Because the new partner should not be like unnecessarily burdened with the previous losses, or he should not make supernatural profits, okay, because the old partners bought land for 10 lakh rupees, now the value of the land is 10 crore rupees. The new partner is, okay, I'll just contribute some capital, but even I become the owner of the land, okay. That should not happen. That is why. So at the time of admission of a new partner, it becomes very necessary to revalue the assets and liabilities of a partnership firm for ascertaining its true and fair value. So why? This is done because the value of assets and liabilities may have increased or decreased, and consequently their corresponding figures in the old balance sheet may either be understated or overstated. If it is understated, we need to increase it. Okay, if it is overstated, we need to decrease it. Moreover, it may also be possible that some of the assets and liabilities are left unrecorded. We did not record in the previous balance sheet, so now we need to record it. And the last thing, thus, in order to record the increase and decrease in the market value of the assets and liabilities, revaluation account is prepared, and any profits or losses associated with this increase or decrease are distributed amongst the old partners in the old profit sharing ratio, because the old assets, the old liabilities belong to the old partners. Okay, with this, a short answer type question is over. Now stay tuned for our long answer type questions, and after that we will be starting with our numerical questions. Okay, thank you so much.